think it's pretty critical information. So I just want to make sure everybody's got it. And a little bit of practice never hurt anybody, right? So this is exactly what we looked at when we're talking about range resetting, right? So you're looking at this and you're saying, okay, well, we have what we could define as like just at a blanket state as the top of the move, right? And the bottom of the move. So we have it in a blanket way, what we could define as the top and bottom of the move. And then when you're talking about going after this move, you have to see this compartmentalized as different ranges. Like at first it would have been, this is the range from here. So you would go after your hold levels on this range. And then that collapses to go after this range. So then you would have went after your hold level, whatever, right here. The reverse on this right there, or whatever it ends up being. Then that collapses, and this is the bottom of that range, which breaks down to this component here. And ultimately, you're going to get into this kind of reshaping of the range. And it's all micro ranges inside of the larger ranges, which, now you're looking down to here if this stuff can't hold. Now you're looking down to this if it can't hold. And ultimately using this as reversal in the move, if that is indeed what's going to happen. I'm not so certain it is because, typically you'd want to hit this and bounce right off. But the third attempt here will crush the move down completely. Like I do believe if you see a third attempt and it fails, you're just going to kind of crush the move down the rapid pace. So that would be something to keep eyes open for going forward meta-wise in the future, as this is supposed to break now. And if it doesn't, and if it fails that attack, it's going to have like a huge, like it's just going to fall off a cliff, right? And for good reason, for very good reason. And then once this breaks, it's going to go after here. And then, oops, we don't want to move that one. What we want to do is we want to grab this, and then it's going to go after this part. And ultimately, it could even end up down here and still be like technically inside of that larger range time frame wise. So it's just what we're looking at here, and delete that. And where these levels come from, it's proportionate to the range. Like it's in size, it's proportionate to the range. It's where you are in the grander scheme of the entire move. This top to these bottoms here, and even could extend all the way down here if it wanted, proportionate to where you are in the move, right? From here to here, which gives you from here to here, or you just say from the top to this, and then back here from the top to that as this move is breaking. And then, possibly these even lower parts of the move, maybe it could dive all the way down here and regain this level. So it is just to be mindful that these ranges, and when you're talking about, working inside of ranges, we had done this earlier in the week, and it's where we got our target there from 2 days ago, right here. And it just, in relationship to where it could go at that time, this is where it could go.
Work smaller time frames up. So actually, if we were to remove all of these brush strokes, if we work up in time frames, that's kind of the first flaw we create, right? So one range here, one final hold level. One range here monthly, one final hold level. We're not going to go too far into time frames up here because it defeats the purpose of why we're looking at this 95.68 level. But we do have to identify, okay, weekly range here, don't need that. We're not even close.
Is the volume a bit better now, or do we need it up a little bit more?
Here, 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 here. So this right here, I would start to look at this as the bottom of that range. So what I would do is I would say, okay, we've got, where's the greediest level on the range, right? Like you first have to identify where the range is, right? So if we're doing that from two small time frames, a little bit more, constantly create this problem where you're not only missing information, but you're creating the wrong architecture if you look at small time frames and up. So instantly, you had asked me, oh, where's the 5-minute level? Just right on, the first one I picked on my screen. Just instantly what I pick is this, because I'm pretty confident that's what you're talking about before I'm even told, because this is kind of obvious. It's right in front of your face, right? Like, okay, well, there's a level. But I would say to you, great level, where's the range, right? So then you get back into this hunt for the ranges. So really identifying that, okay, here's a range here. So this is going to hold up the entirety of the move, just as if you were to create a ladder, right? Here's a range here. So really one of the key nuggets here of information is identifying the range and what is possible within that range, which all comes back to what's called range resetting. So I would start here and say, okay, you have an independent range here, which is back testing the backside of this, right? Or whatever level it's testing in there. Really, the level it's testing is irrelevant here. But anyways, fine. That tests its hold level, creates the next range, and it, it's going to come down here like this and touch this, and that will be like this. That will make this range here just shift here, because all these hold levels inside of here, they will be no longer relevant. They're not important, right? So you can see kind of how the flow of these ranges and what they're doing is being created, right? So we can kind of get rid of these, get rid of these. I would then go.
You can look at this as gaps in the move, like how we had seen this part of the move here gapping down to here. Like once this collapses, this part of the move here, just like we were saying earlier in the week, like once you would have something like this, and then possibly you would have your next component of this. And I'm just going to use this time frame. I'm not too concerned right now about which time frame is the correct time frame. All I'm doing is just marking what could possibly be right, even here. Yeah, I'm not worried about going down in time frames. Local, global, legacy, interior, and it kind of once that breaks, kind of once this range breaks, you basically gap down to here to see if this can hold it, right? Like it's gapping a move, but gaps travel in ranges just for obvious reasons. You can't hold one level and you just go straight down after the next one, right? So yeah, for obvious reasons, these moves, they gap from one range to another. And part of the trick is seeing where that range is developed.
Go to my next time frame here and say, okay, well, this is clearly the range here. So really you have to say, what's the greediest part of this range? Like where's the greediest entry on this range, and start working backwards from there to find this. So you do have something like this right here, which is tested, obviously this is the 1 hour here. It's probably actually a 15-minute level there. I don't think it's quite the hourly. So you kind of have all these back tests, right? Meanwhile, realizing, okay, you've got the range down here. So where can you build your expectations off of that range? So as we go through this thing, and we're just going to skip to some lower time frames here, because we are right here, for example, here's our 95.41 level that we took. That was perfect. So really, in this moment, you've got the thinness of a move, right? Like you've got a move that's thin here, but more likely going to go to this level here. So this becomes a question of, okay, if we go back in here and take a look at where these ranges exist, and again, this is all part of range resetting. So if you go in here and look at, okay, where do these ranges exist? You can start to quickly see how low can it go, right? And if you can see where it can possibly go, you can assume it's going to go there. And this is going to be that moment of clarity again, right? Like this is kind of that final untested level, because everything back here, like we've done this work in the past to see that all these, whatever's in here in these ranges, it was already tested. And, if we have to go do it again, we can simply go to where this range starts, okay? And you can just say, where's the greediest level? Okay, this is where the range starts. So what can hold this up to ladder it? Because even if we were to go out to, and we're just going to go like this, and we're
interestingly enough here, we're
just going to say,
go back here, rewind this 5 seconds. This greediest point would almost be kind of like looking at this as a floating level, right? The greediest point in the floating level can almost be looked at in the same way as to where a floating level would be the perfect setup for a moment in the future. And then this level off of this almost is the perfect hold level to buy, because it's hit that greediest point. And then that greediest point has been, it's already almost as if you have a floating level, and then this can create that next touch. So that's a really interesting thing when you think about floating levels and how they create moments on the chart where they give you the perfect buying spots to create range trends. You can almost think of, and we'll talk about this after, how to find the polarized point and work backwards from that. But if anybody saw the patron stream from earlier this week, they'll already know about that. But anyways, we're going over that again today. But almost see this as a floating level.
What can hold this up to ladder it? Because even if we were to go out to, and we're just going to go like this, and we're just going to say, oh man, this is where the range starts, and this is where the greediest level is. Heck, we could do all this crazy stuff over here for the next, I don't know how many, whatever, 3, 4 weeks, 5 weeks. Eventually, we can come down to 93, and guess what that can do 5 weeks later? It can create, or it can create our final trend in the move, which will give us our final hold. So really, it doesn't matter when this is going to get tested. The fact is that it's going to be tested. 93.83, which is a trade that had been taken by. So like it's just a really great level to take, and then so you're left with perfect level, holding up the entire range, right? You're holding up the entirety of the range on a perfect level, and giving you your next piece of the range, which is 94.51. So realize this.
And then really at this point, when you have this, you are also needing to add your range trend, because this doesn't become the perfect level to buy. The actual range trend does. So whatever you can demise for the range trend, that becomes a little smarter here, because this is that perfect buy level. If this hits and holds, great, but really you need to know the proximity and the degree of angle on that range trend, because that could be above this or below it, which makes a big difference in the moment.
This level and this level is the same exact level. So when you're saying, why didn't it hold up this one and why did it go after that one? Well, this is why, because it can go after that one because it's the next greediest part of the range. But this is no longer relevant anymore. This is tested. It's not an untested level. This is gone, right? And then we can look at this and say, oh, here's our 5-minute level. Oh man, that's such a great level. Well, why didn't it hold? For the simple fact that it's not the greediest level in the range. So your move is a lot thinner here. So when you're comparing these two levels and you're saying, should I buy here or should I buy down here? Well, first off, you're going to get liquidated if you buy this. It can bounce, but again, it's thinner on the move. So it's one of those positions where, although it is a hold level, I would almost think that you would probably be blindsided taking this level because you probably already tested this range on another time frame. And you have a test right there. And now I'm working up in timeframes, which is just highly confusing, not conducive to finding the right information. You have to start by seeing where's the highest time frame that has a hold level, and it's here. It's the 15-minute. Okay, well, I wonder if that's, or 30 minutes. Sorry, I wonder if this is tested. The 15-minute is right here. That's the hold level. So it is tested. So you're trying to buy the greediest point of an already tested range. So when we actually go and do range resetting and finding these ranges, part of it is understanding where the ranges exist on the top and bottom. And we see the ranges and where they truly exist by going to the highest time frame down. Like right here, for example, what are we on, the 4-hour?
And I think this was really a good exercise this week of that, marking out this level as the next range that has to be tested from here. That's really a good exercise that we did earlier in the week by kind of diffusing the other areas that we could have found in here, because we found a bunch of higher levels up in here and a bunch of lower levels down here that didn't really make sense to the next range that could be tested. So we diffused a bunch of the stuff in here just due to the simple fact that there was a much better part of the range it could go after, because it's going to test the cusp of the range. So if you were to think of where do you have, here, let's use the replayer tool for this. Let's cut it to here. Get full real estate on the screen. And so when you're looking at this and you're saying, okay, well, this range is being tested in here. What's the next range? You have almost like a starting of everything from like a reverse level here all the way down to here. So then you have to kind of understand that this is acting as its own independent range down here. So actually instead, it now looks like this. You've got one range kind of in this region, which, I want to say likely represents this being tested, going underneath it and hard closing above it. But then maybe you could find some hold levels in here that can also accomplish that same thing. And then really where this range can exist, and where we found the greediest part of this range, and diffusing it from the top side or working back from the bottom side. When you're working high time frame down, it's better to kind of work from the bottom side up, but you can get the same result working from the top side, because in this case we worked from the top side up. We'll talk about working from the bottom side up again a little later, but yeah, there's really two different ranges here. And so when you rewind it back to earlier in this week, it just becomes an understanding of where that range goes, because there's not a lot of stuff that makes sense in here, and you're not going to get into this trailing queue of things like this. It's not advisable, and it's not common. You're not going to get into a trailing queue of, hit this level, hit this level, hit this level, stabilize, see what happens. break this part of the range completely and then, you know, go after like whatever's down here kind of thing. Typically the way these things are going to work is that it's just going to go right after the bottom of the range and then it's going to try to develop forward, right? Instead of like this hits the bottom of the range and develops forward instead of, you know, trailing down and then going here and then developing the range here, right? So like you're not trailing down and going through the range. You're typically working from the bottom of the range forward. So you need to identify those greediest parts of that range. So you can say when whatever is here, whatever move, or sorry, it would be this one right here, whatever move is there, you need to be eyes right here for the next part of the move, because that's where you're going to start to develop forward, right?
Well, let's mark this and see if we're wrong. Now, we might be right. This might be the correct level, but let's just see if we're wrong if we moved up in timeframes. Actually, you know what? In order to do that properly, we have to identify the range. So we're saying it has two ranges, one here and one here. Let's move up in time frame. Yeah, you could classify that as two ranges, but then your price is off because you should actually be starting up here. You should be like this. And then if we go up one time frame, it's actually just one range. So now you have a different hierarchy of information that you would get, because you would start here and you would find the greediest point from here, right? Actually, it would be from here because there's two candles. So if we do kind of these shortcuts, right? And I wonder if we would be given a different level. Well, we'd still be given this, but we can't use that. But we know it's before this point here. No, it's before this point here, and it's that point there. So you have kind of an origin over here. You have this right here, which is the same candle. So that's okay. I don't think you'd see that on the. No, you wouldn't. Would you see it on the 12? Would you see anything on the 12? Yeah, you have a pretty good level on 12 right there. So actually, you know, your level is right here, 86 or 88.64. So you do have a greedier piece of this range, but really, when you are looking at this and you're saying like, okay, well, why didn't the 5 minutes hold? Well, first off, the range is already tested. So if that's tested, that means it has to be up here, which means it's already tested back. So it has to be there. So you can see this is holding there. Let's just press play here. It's already losing this level, right? Like it's already losing this level, which was tested back here already, which is testing your 15-minute back right here, I believe, on the 15-minute level, which is right here. And this would be okay as a level if this was the greediest part of the range, but you've got a tested range with a range below it that makes more sense. So then you let this move come to fruition and see where can it go, and it goes to your level perfectly because you were able to identify polarization in the move, right? Like this is that level where if this had lost it in the moment, guess where it's going? It's going way the heck down, right? Like it's going to fall through this move like
And then so in this particular move, it's interesting because really you've got kind of this thing that we look for, which is trend and the levels working together here, right? Like there isn't a level where the level can be lost and it can go and trend can support it. And then trend can deep dive to some reverse level. It could bounce reverse level and go above the trend and then hold the trend over time frames. This is a moment where you've got, if you lose this level, you can't dump to trend, because if you lost this level, your trend is broken too. So in one way, if you lose either the trend or either the level, in a way, you're going to be moving down very fast. So there's kind of no, like it can happen, but in this scenario here, you're hitting both at the same time, right? There's no, oh, let's go down here, let's lose one level and let's go back over, because you're actually, both time frames here are just coinciding perfectly. So there is no lose one, gain the other in this moment. So this is why this one is so interesting, and why there's a whole level here that can hold this up, because you don't have a piece that you could lose the level, the trend could bounce and could just regain the trend, right? Like when you lose one, you lose both here. A 5-minute close is a 5-minute close on both. A 15-minute close is a 15-minute close on both trend and level. I guess the interesting thing here, now if you want to take it a layer deeper, which we always do, of course, is my trend line is yellow. So let's presume it's the 4-hour. I'm not sure if this is the 4-hour. Yeah, but whatever trend this is. Could the 15-minute, losing the 15-minute, is that coming close to closing also a 4-hour candle, or did it just create one if it just created one, then you could possibly create a new 4-hour hold level by breaking down below this level and trend. Maybe in 15 minutes, you create a new 4-hour candle. So it could go below this and just kind of linger here for a while, create that 4-hour hold level, move back up over top of this, and then create a 4-hour hold. I think then you get into some interesting summaries you can make, or summarizations you can make with time frames when you're hitting two levels like this. I think it's one of those things where you have to look at the, and time relevance and time frame accuracy is critical in this moment, because if this isn't a 4-hour, then you're going to be looking for 4-hour candle closes, and then you're going to be saying, oh, well, should have been a 4-hour, meanwhile it's a 1-hour, or it's a daily, and then you have a complete misreading of what that actually represents. So in this moment here, there isn't really let's go lower and hold trend, because you're losing that level. You have to kind of think, where's your next ladder point? So you lose that level, you ladder off of here somewhere, right? So you lose that level, you ladder off of here. Unlikely. You actually likely just go ladder off the first touch of the move. Now, I don't remember if this was a 15-minute level, this one right here. This might have been a 15-minute level, or if this was the bottom of the move. It's kind of the same thing we're seeing here, right? You lose that, and you kind of go and just retest the ladder point. Like, you just say, like, let's retest the ladder point. Then you almost have like a range gap inside of your range, like a micro gapping or a range resetting, where this now maybe ladders off something like this right here. So maybe it touches here, and then you have your kind of long-term range trend, right? So that's why this trend is kind of interesting. This moment is interesting because there's almost like a gap inside of a gap, or a range reset that's not resetting the range, just kind of like a level reset and not a range reset. So something we hadn't talked about previously, a level reset. So we'll type this in chat. Level resetting inside a range reset. Reset inside a range reset, where trend and level is lost, but the range is held. Okay, so I'm just going to put this in here, and I'm going to pin this, and that, and then so you kind of have two different components here. You have a range reset and a level reset. So that's what makes this move so interesting, is that it can level reset while still staying inside of this range. But that's dictated because this is like a kind of your perfect moment right here, right? This is your perfect moment for it to hold. And if it doesn't hold, it doesn't mean the range is broken. It means the levels are resetting, right? So almost, funny enough, almost the same thing that's happening here, right? You have some kind of hold level right here. Come on. You have some kind of hold level. I don't know what this is. Probably like a 1-minute hold or a 3-minute hold or something. Yeah, 3-minute hold level, or the reverse from the previous part of the move. This is kind of already tested, so I would just say it's the reverse of the previous part of the move. Hit the level, reverse the move. Sure, you have your trend here. We could just maybe do this on a 5-minute time frame so we don't kind of lose too much time here. I'm assuming this is fine like this, and then you have your moment like this, where really you can't lose this part of the move now, right? Like you really can't lose this part of the move. So what do you have here? You have a reverse right here. So that's your first level. You have a reverse right here, right? And then I'm sure there's something on the 1 minute here. Yep, there is. It's actually right there. So you have the 1-minute level right here, reverse. We can even just put it right here. That's fine. And then, so once you lose this level, you indeed may not lose the entire range. Instead, you reset to find this, right? And now you have this here. What looks like this here, probably like a 5-minute time frame. This looks like this move has been here for a few minutes anyways, or maybe it's a 15. You could just do the 15. That's fine. We're really not putting too much weight into this, other than we just want to kind of see, where this thing is right now. Not a huge deal. Just like, let's just see the very first kind of thing that we lose, and then when you start losing these levels, it's the loss of the range, right?
Hot knife and butter, as they say, or it's going to bounce right off of it because it's at that extreme polarity moment, because this one was already tested back here, right there and right there. So you have a 5-minute level here, asking why it goes straight through. It's simply too thin to support the move when you still have another 1.5% down. Like you have 1.2, this is 122% down to the next level on a range that's already tested. So although the 5-minute looks great, there's a much deeper part of the range it can go after. So I don't know if it makes sense to go after that level with the testing it already had on a higher time frame. Doesn't make it a terrible level. It just means like, yeah, don't be surprised when it goes straight through it. Just simply for the fact that it can, and it had already polarized itself up in here. Like if I trail this move through, you're going to see test there, test here, test here. Yeah, I don't think there's any test left. You have this here. So really getting into, if this is breaking, getting into this short rate here would have been like the best thing you could do from the greediest point on whatever time frame, right? Yeah, you don't have anything there. You have this here. Right there. Oops. Right there. This would have been like a great spot to get into it. I don't think there's anything deeper. There's this right here. I'm not sure if it reached there, but yeah, that would have been like the perfect point to get into it when you break your trend. So I'm sure there's some kind of interior trend here that breaks. This guy here. I don't know what the biggest time frame here is that you can find this on, possibly a 15-minute, and then the 15-minute hard closes. So like, come on, is magnet tool not on? There to there. I would even say it's more likely this one here on the even higher time frame, but this would have been another interior trend, so that's fine. We can use this one, and then so you lose this, and you're holding whatever hold level is in here. You probably would have missed entry, but also you could have seen that polarity right here, because once you lose this level, it's like, remember, you polarize moment and your trend. Those are your shields. So you've lost the level, you've lost trend, and whatever the final hold level, which would have been right here in the move, once you lose that, like everything else is gone below. So part of range resetting and why this 5-minute level is not a good level becomes it's deeper inside of the range, right? It's got a much better level, much deeper. That's a lot greedier. It's a thin position to take. That would be a good way to think of it too. This 5-minute level is a thin position when it can possibly drop another 1.5%. Hey, if this thing could have only dropped another 0.2, it might not have been so bad. You probably would have seen something like this. You probably would have seen one bounce, comes up, hits an inverse, goes down, right? If this level down here, in fact, let's say it was all the way right here, you might have seen something like this, hits here, comes down, hits this level here, comes back up, and then moves up, right? So not such a bad trade to take if you're only 0.2 or 0.3 away, and you're not going to get liquidated if it goes down to the greediest point. But when you have a 1.2% gap between these two levels, there's a good reason why not to buy this level. There's too much below to be lost. It almost looks like more of a short because there's just such a huge gap in this. You could almost just short this right here, and it's just such a huge gap in this move that, yeah, it's too thin. It's too thin to take, that's for sure. And now we are going to go through range resetting kind of a little differently. Let's take the replayer tool off. This is going to be straightforward and tie into what we just talked about. Range resetting is the way in which we identify ranges, right? To see those pieces. And range resetting is where we take any piece, like I showed you guys just now, any piece, and start to identify the ranges of where something is and can be. Like, these are all ranges in the move. And we do this on the highest time frame to see the most relevant level. So if I was doing this, I would say, okay, here's this right here. And the ones that are going to be adjusted, I am going to turn orange for this example, and I'm going to make them dashed. So this has to change because it has already too much noise going through its range. So it can't be the level. So let's mark another one here. This is tested, so it can't be this level. So these are the ones that it can't be inside of this range. This is tested. It can't be that level, right? What it could be is this right here on another time frame. So what we're going to do is we're going to move this one right here, and we are going to change this to green. Let's go this kind of green right there, and let's change these ones to orange. Ones that it can't be, we're going to change to orange, right? Like where range can't exist, so where we have to do work in the future.
I think that's a pretty good idea, is to, when you're learning ranges, you work with what can't it be is a very easy way to start taking apart things like that. Like when you're having trouble identifying what the ranges are, you can do exactly that. You can say, what can it be and what can't it be, right? And then so you can easily say, like, it can be this, it can't be this one, right? It can't be this, but it can be this one. X, that goes here. You can't be this here either. So it can't be those, can't be those, can't be those. And that would be like a really nice way to do it, where to find the range, you could go like this. You could be like, can be this, can be this, can be this, can be this, this, can be this, can be this. And then you're here in the moment, so you're saying, okay, can't be this one. That back tested this. Is there anything left in this range? Are you reversing here? That's already tested. So if this is testing this one, that means it can't be this, and this one's already tested, can't be that. So you're down here, and it can be this because this is relatively untested, and it represents this range from here. You can extend it all the way back here because now you're introducing origins. It definitely can be this one. Can't be this one because this is already laddering that part of the move. So it can be this, which kind of goes all the way back to here. So that's like a really nice way to do ranges. It's a really big help for people, is where you mark all your ranges and then you look at your chart and say, okay, what can't it be? And then it makes it pretty clear pretty quick where you should be at.
About this one here. This it can be, so we're going to leave this one green, and we're going to make this solid. So it can be this can be a level here. Oops, not that. Did the wrong one. Going to make this solid. So this can be a range that we use. This can be a range that we're going to adjust. Okay. This clearly can't be a range. Like, we're going to turn this orange, both of these orange, right? Because it's tested there on this time frame. We're going to go orange like this, and make this dotted, like, yay, like that. And we are going to take this one and copy this over, because this one you can see clearly can be a range, and this has got to go orange as well. So these are your ranges, and these are like where they can and can't be used. So anything in orange can't be used. So let's talk about each one. This one can't be used because you can see there's internal testing in here. There's internal testing on different time frames. However, we can use this to start working through to find where the range is. So instead of this being a level, what we can do is we can move it to here and say, okay, here's the range in here. You can actually move it to right here to find the range in there. So we can adjust it from this point here down to here to say, okay, there's a range somewhere above this that exists. This one is already tested. So you would have to move this down to here to see if there's anything left inside of this range that's untested. This one is the same thing. Now, this can have, this one's a little different because there can be a test from here to here, right? Just these ones can all have that same test, but notice these ones are already tested. So you can't see it's from the top of this candle to the bottom of this candle. That can't exist.
Sorry about that.
However, this one can. So your range is somewhere inside of that. This can't be. There's some already testing. So we have to take this and just delete it. Just like this can't be here. There's already testing in there. So we just have to take that one and delete it and start from this and work back, and start from this and work back to identify these ranges in here, right? Same with this one here. Can't be that. Can it be somewhere above this? Yes, but it can't be from that point to this point here, but it has to be somewhere above this. So you have a bit of work to do inside of each of these to see where that range can exist, right? Because you can see this is tested there. This is tested there. This one's not, so it can exist here. It can exist there. This one's not, so this is, completely free and unencumbered, right? So this is part of understanding the way ranges work and range resetting. Is we go in here. That's not supposed to be a different color. What color did I use? I think it was this one. It doesn't matter. As long you just know that this is supposed to be the same color as this one here. Okay, we'll do it the proper way. We'll copy paste. There we go. So now we've identified kind of what hasn't been tested in a range, and we have to do this from the highest time frame down, and we have nothing in here to do. So there's nothing here to do, right? So then we are going to go down to our next time frame and say, okay, let's start from back here where the range can't be. So we go and we say, can it be here? No, it cannot. You can see that's tested, right? So it can't be here. So you have something in between here that could possibly be untested, like the greediest piece. So you guys can see how this trail is working. And we're just going to do this one here. And so you can say, oh, it can't be this. Obviously, it's not. It's on the 4 hours. So then we go to a 1 hour and we say, can it be this? No, that's tested. So it has to be somewhere above this, right? Like you can see that's there. It has to be somewhere here. You know, this is stuff is relatively tested, I'm sure, on another time frame. So you kind of have to be here. I would wonder even if you have anything here. Can't really be this. It's not that. So it kind of has to be somewhere inside of here was where that range exists, right? Like we are diving deep to find this range right here, 5 minute right there. Can't be this, right? That's already tested. You can see how we found this range though, right? Like there's not a lot of confusion about how to find this. It's simply working through your time frames to find where the level is. And this is not tested, but I have the 5 minute here that doesn't really have any noise by it, right? So it couldn't be this one for obvious reasons. That's tested. This is the next level that's not tested. So this is the highest time frame of piece of the move. So I've worked from the highest time frame down to find where that hold level could be right here, 46.48. So you found where that hold level is going to be polarized in the move because it's the final piece. And you could even possibly have something down here, actually. If we were to look down there, there might be something down here. I don't think there is. Actually, I've done this move before. There's nothing down here. It all starts inside of this. And you can see here's the range. There's the level. This is the range. This is all tested. And the only piece that's moved up so fast, the only piece was down here. So actually, the question wouldn't be, do you test inside of this range? The question would be, do you continue to hold this level over time? So whatever hold level is back here, that hits here, that would be more the question. If you lose this level, you see if you can hold this, right? So it's not a question of, oh, where's the range in here? Because I've done the work in this one. There's no range in here from memory. I don't think I'm wrong, but well, let's just double check. 15 minutes. There is actually, there's one right there. So I was wrong. Okay, so it's good that we actually ended up doing it because this is going to be polarized from this moment to this moment here. So there's $600 gap there between levels. So you have on the larger time frame actually two different ranges here. So we actually have to make another one. Good thing we did that work.
So you can see the power of a connected level when you have a 1 minute develop. You found that connected level, which is giving you your next, I should have said it's giving you your next range for the future. It's a range of development in the moment. So we can, here, let me go back to here, connected levels, and the moment it develops, creating the range forward. And now you can see where it's struggling with this 5 minute, but that development of the connected level here, you can see that development of the connected level really gives the move a lot of grit, and you're going to gain this 5 minute and you've developed a connected range. So now, it would be great if you had a 3 minute in here as well, but that's okay, because if you could develop the 1 and the 3, like maybe you had a 1 minute backside right here, or this candle ended up being the blue candle on the 3 minute. It wasn't, but yeah, I think that was a start of the candle. It was the start of the candle. But if it had been 1 minute before, you could see where you could have a 1 minute connected with a 3 minute that's going after the 5, connecting to the 15. So now you've got even this you can add to that. No hourly. So the hourly is like the disconnected level. So, really, that's a really cool way to start looking at moves when they're developing in the moment, and you can start to see their strength is when they start to connect like this. Like when they start to level connect like this, then you can really see their strength, because it's giving you what is trying to develop a range, which really becomes, you kind of always see this where you have something and it moves out, but then it falls down, and it moves out and then it falls down, and it kind of feels like everything's always moving up and bouncing down. Like, oh, it moved above this and it's going up and up and up, but then it still falls down, right? Like, really what you're trying to do is you're trying to create connected ranges off of deep tests. Jesus, I'm saying it again, connected levels. And when you have a bunch of levels connected all at once, like eventually this thing will hold long enough here. Like eventually it holds long enough that this can now be created as the hourly, right? So like if this thing holds for the next 30 minutes, you know, you've created the hourly and you've got a bunch of connected levels underneath it. So that's really what you're trying to do, is connect as many levels as you can to see where something can move up. So yeah, it'll struggle at the 5 here. It doesn't have, it is connected to the 15, but that's kind of it. It needs more time to develop to connect to the hourly. So yeah, if it can now, it's like, okay, well, it needs more time. Maybe it needs to stabilize, right? So some interesting thoughts open there, and the way we can look at levels. And maybe this thing holds long enough that this can be the connected level. So maybe it just kind of has this thing where it does this, right? Let's mark the hourly. This connects everything. Let's leave all levels untested. So now maybe you're doing this right here. So you've got hourly. You got 4, probably not, right? Yeah, there's not even a chance. You have an hourly, which is also going to be the 15-minute back right here. You can mark the 15-minute front right here, right? Hourly, 15-minute, 5-minute is going to be marked right here, because this isn't going to move up over this, I don't think, in the next two minutes. You got the 5-minute. If this can hold long enough, like if this can just kind of like meander around here. So now you get to this point where they're like, oh, it's holding the level, right? It's holding the level. Like, that's great. Let's make a 3-minute here as well. Let's continue to hold this level so it can create a 3-minute without moving up, right? Create a 3-minute, hold the 1 minute over time, and then you're going to see kind of this thing. So I don't know, like, I think a lot of people go through this kind of stepping stone where they're like, they make this weird connection where they say, oh, there's 3 1-minute candles held. This held the move long enough. And then, you know, you go over time and you say, oh, this has like a bunch of 3-minute candles that are just holding this spot. Of course, it's going to move up, like momentum or moving averages, right? Like volume, momentum, moving average, like all these kind of weird crap bullshit things. And then you can just see like the connected levels that it's developing, and that's when it makes sense for something to move up, right? When the levels can connect and it creates a range, right? Like this is range creation. Move that 3 to here. No, that was the 5 mistake. Mistakes were made. 3 goes here. 5 stays there. Untested levels. So now you're creating a range. This is the range creation. There you go. Connected levels equals range creation. Ranges have nothing to do with trends. Trends are trends. Coco. Oh, without having a range trend. Range trends are different, but range trends are kind of like, you see them as support. Support in a move.
To this final piece of the move, the highest time frame, that is where you have a range reset kick in, where you found the highest.
I'll quickly put a little more context to that for you, Coco. So we can create a range without necessarily having a range trend. Yes, and then range creation can create range trend, right? So like range creation can create range trend. Right now, our range trend could be this, but you know, we're just trying to kind of develop some type of daily right now. Like the 4-hour here is just hard closing, and we're testing to see if the 4-hour is a viable part of this move, right? Like this would be a range trend because it's representing this, but this may in fact disappear over the course if we create this daily part of the move here, and then the daily may break and come down to here, and then it may create that range trend there. So the range trend isn't as important right now, as more is trying to develop this move. Like this is the range it's trying to hold right now, which is these 3 levels we had marked from Thursday. And right now it's just trying to hold these levels to develop a range, and then connected levels can develop ranges and for the future. So you're developing a range for the future, which can give you your floating level, which can create a range trend interior to the exterior, or the actual range trend off the daily, if this hits right here and this continues to stay in over the next course of 2 days, or you know, what have you. 2 days and you have your actual move and it's, gone up and over here and maybe it lingers here and creates a hold level here. We can't see that far yet, but this is trying to create the next range right here. Like you can see how I've gradiated these levels, and you can kind of see like how many color pattern. Kind of did that in a way to show like it's rounding towards strength at the bottom, and then where it has to go on the top there. So yeah, hopefully that helps.
Time frame piece of the move, and you have to do that same range find inside of that range, right? So there's another range find in here, range within a range, right? To see, okay, the highest time frame, greediest point is going to give you your strongest level. And that's how you find it, is by range resetting. And range resetting is simply just going from the highest time frame down to the lowest time frame to identify where the ranges can exist, okay? And once you find where the range exists, you find the highest time frame, which will give you the kind of best point to take entry. Now, you can go deeper inside of this range. Like if we were to go to the 3 minute, and we're going to mark separate levels here. So we're going to go to the 3 minute and say, okay, we have an entry here, and we can go to the 1 minute and we can say, well, we actually might not be able to see the 1 minute. That might be too many candles back for TradingView's memory here. It only has X amount of candles back. Hello, TradingView? Okay, we start again. Well, we don't start again, but we just kind of go to the high time frame here. Cut this guy off right here. And hopefully we'll get to a 1 minute candle. And we might not, though. No, we're not going to. It won't let us. It breaks it right there. Okay, so we clearly can't get to that time frame. So what we have here is only the 30 minute time frame. Let's get back to that point. Here, go to our 5 minute candle. This we do still have. We still do also have a 3 minute candle here. This gives you the highest point in the trade, right? That is the lowest time frame, and it also gives you the strongest point in the trade. So now you have two different levels. You have 46.48 and you have 46.36, right? This encompasses one test. Two different levels encompass one test. Which level it goes after is always going to be the dictation of how thin is the move, where is it going to bounce prior, right? So an example would be if I was on a 5 minute chart here and I said, okay, is there a 5 minute greedy point? Okay, there is actually the 5 minute greedy point here. I would use the 5 minute time frame on the next piece below, because 1 5 minute time frame is validating that next 5 minute time frame is going to say, okay, well, we've hit 1 5 minute time frame. We're going after the next time frame, right? No 15 minute level, so I wouldn't use a 15 minute time frame next. Okay, is there a 3 minute level? Was a 3 minute level hit, or was a 5 minute level hit? It was actually a 3 minute level right here. What's clearer, the 3 or the 5? Well, let's check. 5 is clear. The 5 is completely unencumbered by any noise. The 5 is completely unencumbered by anything. You have the hold level and it just goes straight up over it. The 3 has more noise associated with it. It has kind of a candle that stalls and goes there. So I would immediately rule out the 3 minute candle in my range resetting. So when I'm trying to decide between two different levels like that, I'm going to the previous time frame, or the previous test that was established, and I'm saying which time frame has the least amount of noise and is the clearest hold in the move. And I would use that same time frame down because it's confirming that a 5 minute is held here. It's going after the next 5 minute inside of that range. And then I would probably even look at the range prior to that and say, okay, was this a 5 minute hold or was this a 3? It's a 5 minute hold level, not a 3 minute. You can see the 3 minute was already tested here, and this 3 minute was here, which was already tested. So it can't exist, right? So that's a clear definition right here. The 3 minute is here, gets tested 1, 2, 3 candles later, which creates your next hold level. This gets tested 1 candle after. So it can't be a 3 minute that we're using, but what it can be is a 5 minute, because a 5 minute is clearly unencumbered by anything. Here's the 5 minute hold level, doesn't have any tests in that time frame, goes up. So now when I'm deciding between a 3 versus a 5 minute inside of this range reset before I go back and jump into higher time frames again to find my next range, I could clearly and consciously use this 5 minute candle as that part of the range. So this is no longer useful. And you would eventually trail this through to find whatever points and, buys or whatever you have in the future here. Like here's one right here. This was a, good one right here. Possible that there's something right here on a 15 minute. It kind of looks like this might be a 15 minute level, or okay, maybe it's somewhere else. 15 minute levels right here. right? A little bit of a smarter buy, which also could be something on the hourly. Yeah, but we don't have any 15-minute levels below. So, you're using your timeframes to kind of give you that information, right? So actually, let's go back to the daily here and look at range resetting again. And that's as far as we take it with the range before we reset the range, okay? We go and we identify where the range is on a highest time frame, and we can say, so we're going to do another one. So we did one that's kind of this conglomerated tested range here. Like this has some kind of, it can't be like this level here that we marked. We originally didn't have this, or this. What we had was this, and knew that we had some range defining to do. And as we broke it down, we actually saw there's two independent ranges here, one here and one right here. And then we broke those down to see, okay, 90, or sorry, 40, 62 is a level there. And then in here, we can already delete the 3-minute level and take that 5-minute level right here, right? So and this is already tested in the moment. That was our example where we said, oh, what could it bounce off of, right? So you have two clear levels inside of a range before you reset the range and go back to your higher time frame to find the next piece, right? Like that's what range resetting is. We start with the highest time frame to justify where the right levels are, and a big part of that is identifying where the range exists, right? So when we go back to our highest time frame, remember we started from this time frame down, saying that okay, here's this range's level, and this is tested. So now we actually can't use this. Delete. Let's use the start of the range, right? To identify where it can be from this point here to this point here, right? That's a little different than these green ones, okay? So these green ones are ranges that aren't tested. Like this is a prime candidate for a range that's an untested range. So we would go here and we would say, okay.
Yeah, so I think this is just like
right?
what we talked about earlier,
again, how you would range
the process of elimination and saying like, okay, well, which range makes sense? Which ones can and cannot be?
Reset, or maybe we'll do the current part of the move. This seems a little more exciting to do something that's relevant right now. And we say, okay, so this is the range right here, okay? And let's verify this is not anything on the weekly. Obviously, there's nothing on the weekly, so we can't use this time frame. There is no like hold level like this where you come down and you bounce off it and create another one right here. So this is the range right here. It doesn't exist on the weekly, so we can't use it. So we must go to the next time frame, which is the daily. Let's go to the 12. Okay, we actually have a nice 12-hour level here. So we have a daily level there, right? And we're just going to mark all these for this example. We have a 12-hour here. We have a 4-hour there. It's kind of got some noise. Don't really like it, right? Like it's kind of got that same noise that we use to disjustify or discredit, I should say. I don't know if disjustify is a word, but discredit the 3-minute level. It has some noise as to where this 12-hour doesn't, right? Like it has no clear noise. It creates a hold level and it just goes straight up and over. So, in creating this level, now we can simply go after the greediest part of the range instead of having to break the range down into a pseudo hold. I think we skipped the time frame here. Let's go to the 4. That's where we were last. 4-hour. Let's mark it and take a look. Has noise. You can see there's some kind of internal testing in there. It has noise through that candle. Let's go to the 1 hour. There it is right there. You see that's that internal testing. So you actually have a daily, a 12, a 1, right? And then you have this guy here. Don't think this has ever been tested, but it's also not something I would use. I think it's when you're talking about how thin a move is, let's look at this for a second. 0.94. It's good enough reason to drop in my books. Okay, so let's continue going. It's way too thin up here, way too thin. If anything, you're going to bounce here rather than here. You're going to bounce off the top of this. Now that's a different kind of thing that we're not talking about. It had nothing to do with range resetting. But yeah, like do you go here or do you go down there? Yeah, you go down here. As you're going down through this, your job is to find the highest time frame. So we're instantly going to delete this. We no longer need that. And we're going to go back into our higher time frames and start that work again. Almost like as if we just kind of range reset our expectations here. That's just part of the move. And you have kind of the 4-hour that we adapted to the 1. So the 4-hour has too much noise, so we can't really use it. I think there's a better buy there. And then even if we were to use the 4-hour, what's the price difference here? $5. I would use the 1 hour because it's that much cleaner of a level than this 4-hour somewhat tested level. Because at that point, if we're using this kind of dirty 4-hour level, I'd rather use the 12-hour, right? So let's go down to the 1 hour here. And that's where we saw this level here, greediest part of the range. We know it can't really exist down here. If you actually go and do the work, you're going to see that This one here is tested. This here has that same noise and is tested inside of this candle. So whatever 15-minute is inside of this is already tested. That's tested. That's tested. You don't have anything left. So really your greediest point becomes this 88.44 level. You can see on the hourly charts, this is tested here, which brings you to this candle here, which is tested here, which brings you to this candle here, which is not tested. So this is like good if you want the greediest level inside this entire range, right? We could actually take this replayer tool, put it here, and see if there's something greedier. I don't think there's going to be. You got a 30-minute here. That's tested. So like you're looking here, tested to this, that's tested. This is tested, nothing there. Even this one here, this is tested. That's all tested. And you don't have anything back here, so you can't use that. Let's go to the 15. Yeah, the 15-minute, this range is tested here, right? This is not tested. So you do have a 15-minute greedy point. The backside of this range is tested though. So now you're kind of in that same scenario. Like, what do I use? Do I use this or do I use this? So we're going to leave this one here for an example. I'm going to color it gray. Well, yeah, we'll do gray. That's fine. Maybe like a lighter color so it's visible. And we're going to copy this one and paste it and go to the left side here. This is tested, can't use it. This is tested, can't use it. There's nothing left there. Let's go to a 5-minute. Do the same work, right? So you can see there's a pretty clean and clear level here that's untested. There's a range that's completely untested. This is tested here. That's obvious. This guy here is tested there, and there's nothing back here. About a 3-minute, right? We are already at this point and back. This 3-minute is tested here, so can't be that. Actually, it tested twice, so there's nothing on the 3. Even here, this is justifiable enough. The only difference is it wasn't on the 5-minute level. So the 5-minute level is actually justifiable to use that. You have this, right? Which gets tested right there. So that's gone, which brings you up to this moment here, and that's gone. And if you were to do range resetting from the higher time frame, you have this guy right here. And I don't believe this one was ever tested. So it was actually just indeed that 3-minute that was tested, which is fine. Again, once this is tested, whether you're taking a trade on that or not, I'm not so certain you are. So really this can't be the level.
This is a lot of the same as we're seeing right now. This is a lot of the same we're seeing right now with a laddering of this move, and not really looking for certain levels to test to rebuy, but rather looking for what can hold the move up and develop the range. You know, rebuying some of these float levels becomes pretty risky at times. You know, even this one right here. So yeah, okay, this is like a float level. You know, where's your risk on that? Yeah, it's a good amount of risk to take, 25% to hope something bounces. You know, the reverse level would be smarter. Work back in time frame. So we'll talk about that after the video.
Let's delete that.
Or back from the polarity points.
This can be, and that can be. So we have worked our way from the highest time frame down with nothing left. So this is where we reset our range and go and look at our actual trades that can happen, right? So now we have a marquee of levels. We have a daily, and we have an area where we can say, okay, where's the greediest level? So when you're looking at this, now you actually have identified where the final points can be. So your real polarity is right here. Like 87.75 is the real polarity. That's where this move has its final kick in the pants, and that's going to drop this move. Like, yeah, once again, a hot knife through butter. It's going to drop that move completely, right? And you reset your range after you get to a certain point. So the key piece of this again is identifying where that range exists. Okay, so you identify the range itself on the highest time frames. You then go and break it down to find the greediest points, right? So when we look back through this range, we know we can't buy a 4-hour level. There's nothing here on a 4-hour level we can buy. We'll do this from the top. Can we buy the daily? Yes. How thin is the range? Well, you've got a full 1.29. Probably not a good spot to buy if you've got 1.3% left in this. So I would immediately discredit this and take that out. So now we're left with a spread of 0.95. Okay, what's next? This could, by all means, bounce all 3 of them. We've got a pretty strong 12-hour level here. This is a pretty strong level. So what was that, 0.9 that's left here? From here to here, 0.9. 12 hours pretty strong. You know, it's not a bad trade. 4-hour we can't use, clearly. The 1 hour we can. There's nothing on this 1 hour candle. So now you have, where does the first bounce happen? Here or here? Okay, now when we're in this trade, we have kind of an interesting set of data to use. We could long 88.64 successfully, knowing that if 88.64 doesn't catch this thing, 88.43 will. Because this is going to go through two tests, either here to here and up, or either here to here. What this is arbitrary. This bounce point, we don't know where that's happening yet. The important thing is that the second bounce is going to happen here. So we now can be in this trade in two ways. We can along this level, and if it touches this and goes straight up, we're good. That's scenario one. Scenario two is it hits this, bounces to that level to see if it can move above this and up and break whatever trend is holding that down. That's scenario two, which again will leave us with, if we longed here, we could actually get out of this trade in an unharmed way. Okay. If this holds it down, it fails down to this level, which just makes this the larger time frame first bounce. Okay. So now you have like this, you long here, first touch, second touch up, right? And this is that level that's going to bounce it because it's polarized in the move. Okay. First scenario here, here, and hits some kind of inverse and pulls it down, right? Like, which is just, again, this is one time frame, first touch, second touch bounces here. But it gives you 3 data points to use, because what you did is you reset the range back to your highest time frames to see where the buys exist. Yeah? You have a 12-hour here. In my experience, I always go after the greediest level. So I would likely buy 88.42, measure the difference from here to here, and say, yeah, that's pretty close to liquidation. I would really monitor how 88.43 does. But really, now we have 3 data points. We know that the gap exists from here to here. So either this holds or this holds. But what is that? This is 2 different ranges on 2 different time frames, right? So on a 4-hour, it's not. Here is one range, here is the second range, right? So you have 2 ranges in this move. You have what's holding this piece up and you have what's holding this piece up. So you will, in fact, bounce off of this range. Don't know how big the bounce is going to be. Don't know if it's going to hold the move up, because inside of the deeper time frame, it's one range. So where does the range test? Yeah, it absolutely can test in this over the course of the day. It can absolutely test here over the course of a longer time period. Maybe it's not 15-minute candles, but maybe it's, 3 or 4 hours. Maybe it's not, 15 or 30 minutes, but it can absolutely test 1, 2 before it breaks, because this is polarized, right? So now you have data points that actually allow you to trade this properly and see, okay, here's 1 range test, here's 2 range tests. And therefore you have range resetting. You work from the highest time frame down to see where your exact levels are. And it gives you your polarity points and your gaps as to where if 88.42 collapses, to long 87.75, because this is simply going to give you your next ladder point in the move. And it's even justifiable on this time frame wherever we are right now. But it starts to become justifiable on all time frames. Ladder point to here, ladder to here, ladder to here. This actually hasn't even been hit yet. This hasn't been hit yet, right? So if you were going to go after the greediest part of this, you can see it on the actual range. Like when you reset the range and you go back to your higher time frames after doing the work, you can see where the ladder exists. Ladder point, ladder point, ladder point, ladder point, ladder point here. This is going to be your next and final one. But this also makes it like this. Extreme polarity, final level before a massive dump. Now that's extreme polarity. We still have, get rid of that, get rid of this, delete all of these, delete this guy, delete this guy. We still have our 3 data points that we can work this off of to see, okay, does this hold? If so, this is going to be the long-term ladder. Does it go out to this? And then there's a gap between these 2 levels. So range resetting is not overly complex, but it's a lot of work, because you are basically going and defining the greediest points at every single range by using the highest time. Again, non-destructive work, right? Highest time frames down to understand that once we are looking at a range, we understand the implications of that range and the data points that it represents. Because at a surface level, most people would look at this like this and say, oh, here's the hold level, 12-hour, $9,000. What about these? Well, what's wrong with these? Why can't we use these 3 levels? Because it's in the range and it's just the greediest points, but how do we clearly see them? Or somebody would go like this and they would say, I don't know. Well, it's the same level, so it's kind of hard to use this one. But they would say, oh, here's the 4-hour level. This is the perfect buying opportunity. I beg to differ. The perfect buys exist down here, and you have 2 data points that show you where this thing is going to hold and where it could possibly go. So the last level is obviously polarization, and these other levels are where it can hold. So is it going to test once, twice on this orange line and then move up through whatever trend exists here? You know, whatever this trend is it going to come down and go like this? Oh, we bounced once, we bounced twice, and now, you know, oh great, we're holding through, right? Or is it going to bounce once, bounce twice, and then come up and break over, right? Like that becomes the question. And it just breaks over right there. Hallelujah. Great job, Bitcoin. And it's the same thing you would do in all of this, right? Like you'd have, you know, 4-hour level here, can't be that, et cetera, et cetera, et cetera. Going back to our example earlier, where we looked at the 5-minute level and we said, okay, well, why can't it be this? Why can't, was that the level that we were looking at? No, it was something else. It was this one here. When we say, why can't it be this? Well, if you were to actually trail the range, you would see that it's right here. It can't be, it can be this, but why when it can be this, right? So then you're given a clear gap in the move, the same gap we had, that 1% gap that we had. Greediest part of the range will bounce the move. It's also extreme polarity, which just does this. Let's take this guy delete, and let's go you right here, get rid of you. Right. So this is that next point where it's like, okay, here's a really smart area to enter the trade. And I think, you know, we owe it to ourselves to do a little bit of work here, because again, going the wrong way in time frames, you need to see whether this range is truly tested or not. Right. But then again, greediest point from here, working back. That's tested. So it's right here. So see, minor difference, but possibly the difference between getting filled or not. I would look here for the next buy, as opposed to now I might also buy 95.22, but I wouldn't lose my shirt if we went down to 9,500, because I realize this is that level there. So I would probably just buy at 94 or 97 here, instead of worrying about getting too crazy of an entry too high, right? Like I like to protect my entries. So
Okay.
If you
Yeah, so Bitcoin, trying to get over that hourly, right? Like that's where it's at right now. Trying to get over that hourly. We've got 6 minutes, so you know, ideally you linger here for 6 minutes. You don't break up over it. Yeah, you're breaking over it. Well, that's fine too. Yeah, now you're really looking to try to aim over top of this, right? Yeah, Bitcoin looking like it's trying to stabilize, but you know, let's just give it a little bit of time, because we still have 5 minutes left. So, you know, a lot can happen in 5 minutes. So you just leave it marked right here, and ideally you just kind of linger here 5 minutes, and then you boost right over top of it. That would be your best case scenario here for it'd be your best case scenario for Bitcoin right now. If you're looking to create support, you're in a long. You really want to see the development of that level. So, you know, at least over the day or the course of the day, you have a nice shield on the move. So, yeah, that's really a great kind of piece to have right here. Too premature of a move up, and you're going to see this, right? You're going to see hold level, gets hit, continues to hold the move. But, you know, this goes here. Maybe it comes back to here and moves up. And, you know, now you can start moving some of these things that we had before, where, you know, you have the 5 minute here. Maybe you have a 3 minute inside of there, which you have the 3 minute on the same spot. And then possibly you have the 1 minute even a little deeper, which you do right here. And we don't need this red one here. So you have the 1 minute, the 3, right? You have the 3 minute, which we took the wrong colors here. No, we didn't. We took the right colors. This is supposed to be the 5, so we're going to mark this as the 3. And then the 5 minute can be even You could say right here. So you could kind of gradiate this a little bit to give you your bit of a motion in this move. Although now you have a problem because now you have the 15 there, right? So you want to go even a little grayer for this one, even make it more gray. So now you got to go here, and you take your 5 minute and you can put it. Like, I mean, you can put it on either of these two spots. You can maybe just put it on the wick and then the body. So something like this, and you start to look for the hourly. You zoom out and you can see there's a bit of a different gradation here, but you're creating the range, which is nice. You're creating a nice healthy range here. This can be anywhere from here, debatable. Personal preference, risk versus reward, I suppose. See where trend lines up to understand the depth of how far it can go. And this really becomes, you know, the development of your range that's happening here. And yeah, your hourly here, which is great, because now you're developing really set criteria. If you never hit these levels and you linger around here for the next few minutes, you can move up and above, and you have untested moves, which give you a really healthy range for the next part of the move. I don't think this red is anything. I have it here. I'm not really sure. Let's get rid of this. Yeah, shall we? We shall. So now you have really kind of a nice piece of clarity for the next few minutes of the chart here. You got 3 minutes till the hourly close. So if you kind of continue to hold here and linger around here, you're in a really good spot because you have an untested range here. So you've developed your range going forward, which is really nice. So I want to talk about one thing before we jump off today. We've gone over some new things today, so we won't beat it too much. But what I want to do is 15-minute downtrend relevant. I would look at more what's trying to hold right now. The downtrend may be relevant, you breaking through it, but yeah. Taking a look at your 15-minute. Yeah, I mean, it's important for sure. It'll help fuel the move up, right? Like, all things considered, if it's breaking that 15-minute downtrend, Coco, while it's doing all of this, that's kind of a great thing for it, right? So yeah, I wouldn't say it's irrelevant. I would just say it's another combining piece to show you what's going to happen here as you break out and develop your range, right? So I want to talk about developing triggers in trades and what we talked about in the patron chat today, earlier this week. So this was kind of looking at moves and finding their final moment of polarity. So you can have all this stuff on your chart, and you know, when you're trading big leverage, you can do something different than what you normally would. As you would normally say, here's a 1 minute hold level. Let's buy this level here. Thank you. You're welcome, Coco. Yeah, all things considered, right? Like, it just helps strengthen that move, and it just helps it give it that, you know, if you end up breaking that 15-minute, maybe that 15-minute comes like this, and you go here, and you've developed that hourly distribution candle from right here, and then all of a sudden you break this, and you're here, and this is about to close a 15-minute candle right here, like you're just about to skyrocket, right? And so that move can be onset and fueled from here. So that would be the relevance of that. So when you're looking at these moves and you're saying, let's buy this hold level, for example, because you want to get in on the trade, a lot of times you are going to go and test the depths of your trade, right? So a lot of times you will go and test the deepest point in your trade, like we saw here. And a lot of times what you can do is you can, instead of buying hold levels, if you wanted to reduce risk even further, you could find the points of polarity in a trade, and then you can set your buys there, because there's a scenario where you buy this and you trigger out right here on the hard close of this 4-hour trend because you've lost this level and all these bad things are happening. Or you could trigger out on this, you buy here and you trigger here, right? So you can say, all right, is it 8 o'clock? It developed the hourly, and it's going right over top of it right now. So this is the like mirror situation of what we just talked about. This is literally perfect. So that's why you're seeing such a nice strong reaction here, is that hourly developed to the minute, and now you're going to see this thing probably boost pretty quick, right? You're going to see this thing smash its levels and crush, as long as it can, you know, close a few candles over here, and you're going to see this thing probably crush pretty quick. Hopefully it develops up for people who took that long from down here from earlier in the week. And now, so you would typically buy here, measure it against your trigger point, and you're saying, okay, I have a 20% risk I'm willing to take on this. Well, it needs to hard close that. So maybe I'll, you know, manage this trade manually. So now you're saying, I'm going to manually manage this trade because it's going to hit here. I'm going to lose 17%, but I don't want it to hard close because sometimes it's going to go down to this level because it could ladder off this point here, and then it could regain trend. Now you've given yourself a 30% loss proposition. While at the same time, it could go down to here and you're at 42%, right? And it could hit this and it could continue to move up. Or it could go and move down to here and now we're liquidating but still moving up. So I think the way that we do this is a little different. What you do is you find the point of polarity and you work backwards from it, just like it's about trying to crush up, just like we just said. You find your point of polarity, and instead of buying the hold level, what you do is you say, okay, where's my polarity in this chart? What are the possibilities that can happen? So we come, oopsies, we don't want to do that. Hold on. Wait one moment. We definitely don't want green text. You go down, you test your 5-minute level or your 15. That's fine. It needs to hold this over time. It tests this 3 and the 5, the 1. Can it test this trend? It can test that trend. Can it hold this trend by not hard closing it, doing like that? It can do that. So let's stop here for one. How many possibilities have we seen? 1, 2, 3. We'll call this 4. So we have 4 possibilities so far. So 1, 2, 3, 4. With that said, could it hit this trend here? I don't really think it can hit the 4-hour, but it could redevelop this by even going like this and kind of laddering above this without hitting this trend, right? Could we create an origin level here anywhere? So this would be an origin level, right? That would be an origin level. And I'm wondering if you can create other ones. Let's just take a look real quick. I think the 1 minute is going to be the deepest origin, which is right here. So you can actually test that again. So you can go to this origin, break that origin, reverse this. So you've introduced now how many different possibilities in the chart. Now you've got 1, 2, 3, 4, 5, 6, 7. You can hit this and make this an origin. Although I don't think that's going to be an origin. You'd have to actually go back here and look. I guess we have to do that now too. So we won't find the origin, but now you'd have to go back in time frames and find the origin. Let's just move up one time frame and just maybe double check this thing to make sure there's nothing else hidden here that we might end up seeing. I think maybe you could have a possible origin development off of here because it did go a little lower than the level. There might be something that could be an origin level, which now brings you down to this deep dive regain that, right? So now you've got how many possibilities in this trade? You've got 1, 2, 3, 4, 5, 6, 7, 8. So now that we've kind of discovered all the possibilities of this trade within the range, you can simply work backwards, because where you would trigger out of a trade, if you take this 1 minute level here, where you would trigger out is you would say, oh, like you could go all the way down here. You get liquidated. How many times has happened to people? You just get liquidated before moving straight up, right? You just get liquidated and then I move straight up. So that's how you avoid this when you're using bigger leverage, is you define the possibilities and then you set your buy relative, right? You set your buy something like this right here. You would set your buy somewhere just above what would trigger you out of the trade. That way you have the flexibility to go and hit this and deep dive it. And then you could even take it one step further and say, well, we could deep dive this. We already have once. And where did that deep dive it to? Deep dive dove it down to here. Now you open up a whole new can of worms possibilities. So there has to be a point where you have to understand where the range is in the moment. And now you've opened up this whole other can of possibilities. So I would simply, before going too far and getting way too deep in the analysis, simply put a buy kind of right in and around here that could still regain this trend. And then you've had this moment where you would typically be buying one of these levels and triggering out in and around here, right? Like you could even maybe go a little further. Maybe you said this latter point right here. So you'd buy here and you'd be almost out of this trade. Like you'd be triggered out of the trade before it moves straight back up. So you can actually go and do this the opposite way and start saying, okay, instead of buying this 1 minute level, if I'm going to buy the deepest point of this, should I buy this one? No. Should I buy this one? Number 2? No. Should I buy this one? Number 3? And then you're really in a trade where you can kind of reduce risk with higher leverage. So this is a way that you can use higher leverage to reduce risk and to have that moment where you go and target those deeper levels while still being in the same range. Like you're still in the same range of this trade, which is being dictated by these trends. And really at this point, you'd want to create the daily. So I don't necessarily know if you'd go, like, let's delete this to see where that candle is. I don't know if you'd go deeper than this here. So I do think that maybe you'd be above this, like right here. So now I think you can kind of diminish this down even a bit further and say, yeah, you could, let's delete this one here because we can't really see, can we? Yeah, you could slightly ladder off of this one, a little above it, a little below it, right? So I think like this makes a smart buy, and then you're, instead of triggering out around these marks, you've given yourself that ability to have a very minimal loss while still representing all the larger parts of the move. So I think this is a really smart way to work backwards when you're working with higher leverage. And it doesn't have to just be higher leverage, but this is a really smart way because too often I see people marking hold levels and then just taking them and not seeing that there's a deeper possibility in the chart. So by working backwards through your possibilities, you can, well, we are really zoomed in here. Jesus, are we ever zoomed in? But yeah, I think you can diminish your risk by finding a lot of those deeper points in the move. You can find a lot of those deeper points, or instead of taking this level here and it sinks way down, you can reduce all that risk, right? Like you can reduce all that risk by going to the most polarized points of the charts and then setting buys right above them so that instead of triggering out on those levels being hit, you're giving yourself the ability to enter those trades as you would normally trigger out of a trade. So kind of, I'll just call this reversing polarity. Reversing polarity is what we're going to call this. So you're just kind of reversing the points of polarity into buy spots, right? Like you're just reversing polarity in this. So this is something I would look at when I'm thinking about taking, higher leverage trades, and what I always look at when I take higher leverage trades, because where you stop out in some trades actually ends up being like where a trigger point might look like you have a trigger point for one trade. And that's the relationship you build, is that if I'm buying here, where am I triggering out, right? Like at what point do you just trigger out on the level loss? So then, you kind of just got a mute point and then you could just still buy here anyways. You could safely take this trade and still buy. Or are you saying I'm buying here because I want to trigger the ladder point from here to here? Well, if that's the case, then you should be buying just above trend so that you give yourself that, same trade, but just better results. It may cause you to miss a few more trades, but in the end of it, you're going to reduce risk a lot. And a missed trade is better than a losing trade, like 10 out of 10 times. I'd rather miss trades than have trades I take and I lose money on them. So would rather miss 5 trades and not have to worry about the losses, right? Or you could just get like the super accurate stuff like this, and then you just move on. And now we're developing that hourly. Like we said, I think this thing had a pretty wicked move, right? Yeah, it had gone right after that 5 and now it's ripping up past it. So yeah, okay, it's trying to develop its move, and now you've got to get over the 4 hour, which is just very straightforward. It looks like it's going to, and it's going to continue to move up, and we'll see if it stops here and continues its traverse down, or if this is what this range is going to do for this trade. So yeah, I think this is a really interesting way to look at it. Reversing from the points of polarity when you up your leverage is always a smart thing to do. Okay, small break. Lesson's pretty much over for today, but it's because a lot of events can happen, but often do not. And the same things that need to happen for these greedier spots, for those greedier spots to execute, seem to appear as indicators of the move not holding. I understand entering on these greedy scenarios, but it seems like they rarely fill. Definitely going to review this one a lot. And so that's the balance that you have to find and accept. And I would rather use that word accept. That's the balance you have to accept when you're talking about trading with leverage, because you now are breaking this trade down into how good are you of a trader. That's what I would break it down to, right? Like you're talking about just because of a lot of events can happen. Rewind this back to here. Imagine the amount of events after you touch this level in this moment. Rewind this back to here. Imagine the amount of events that you could create. The potentials are in the thousands, right? We have some pretty linear higher time frame moments that can happen, but the potentials there after this level gets hit, literally in the thousands, right? So you have to defer this back to how good of a trader are you, because if you rewind back to this moment when we had talked about this stuff down here being the next levels to be tested, look how accurate we got. right? So the more accurate you can get on the first test of a range, the knife catch, as we'll call it, or as it is called, we're not just calling it this is what it is, you're catching the knife, goes down to how good of a trader are you. And if you found that point of ultimate polarity and you buy it, there really should be no risk, because then you can see where your shields are in the move. So entering the land of hopium becomes more of a reality the less accurate you can be. And I don't want to use that word less accurate. The later in the move that you can find it, because if you're sitting here for this short, and we had marked this short, but I think we, when we came to the charts, I believe this happened like 5 to 10 minutes before we came that morning, right? Like when I came into the chat, like, okay, look, it's 6:40. I was a little late that morning, 6:45. I believe it was right around 7 o'clock when I had come. So like 6:50 right here, and I had just marked the level. I was like, oh, it just got missed, so there's nothing to look at anyways, right? But what we did know is that it's coming down to here, right? So like we nailed it. And this becomes a how fast and how accurate can you be. It's two scales. How good are you at finding the right level, right? Which is the very bottom of the move. And how fast can you get into the good level? Because if you hit this level, there's no risk. You've taken the knife catch, there's no risk. So you're not in the land of hopium. You've just been rewarded for ultimate accuracy, right? So we're rewind to Thursday, we mark these levels, we mark the greediest point, you take your greediest knife catch, and you're in the trade with no worries. You trigger out when you hard close whatever trend you develop, or you develop your triggers, and they would have never been released, right? So you just go here, you can even just go to the hourly, speed it up. You hit your level perfectly. There's no reason to exit this trade yet, because you developed your 4-hour trend. There's nothing that would tell you to exit this trade. So there should be no hopium here. This should simply be, hey, I did good technicals, I had the foresight to see it, and now there's nothing there. Hopium comes when you have to start justifying, oh, we're going to reverse here, and then it goes way below it to create the trend, the localized trend. In the moment, it goes way below it, creates a localized trend. Then now you're in that land of hopium, like you said. Now you're sitting there and you're like, oh, I hope it holds, right? So, that's important to be aware of, that the better you are of a trader is going to reduce that. Those greedier spots to execute seem to appear as indicators of the move not holding. And then so let's say you miss this move right here. When you're trading with leverage, now you have to use polarity and reverse your entries on polarity. Do you understand? Because you have to reduce risk, because this is the ultimate reduce risk. Like if you were to tier these, like DEFCON 1 being the best and DEFCON 5 being the worst. Like this is DEFCON 1. This is like the most, or I should say, that's a bad example, because DEFCON 1 is more dangerous and is a lower enough. Let's not use that. Let's just say this is the best spot with the least amount of hopium. These spots thereafter become more vulnerable because they don't have shields in the move, as to where this is just like, yeah, well, like simple. If you lose your trend that it creates, you're out of the trade. So there's no risk. And then as a leverage trader, as the move goes on, now you have to start reversing those points of polarity. So the next spot you could have taken would have been the reverse level on this, because it went through it. You can't really get this level again. So hit here, get the reverse here to create the trend. That would have been your next spot. And then, if you're buying all the way up here and you're just sitting there like, oh, it looks like the move is going up, hopium, well, that's where, if you're a leverage trader, you have to take your final hold levels like this one and then reverse the possibilities. And if you miss the trade, that's because you didn't see this. You didn't miss the trade because your technicals weren't good enough. Actually, you did miss the trade because your technicals weren't good enough. That's exactly what it is. You did miss the trade because your technicals weren't good enough, because the entry is here, which we saw on Thursday. It hits, it moves up, and now it's trying to create, a larger move up. Everything after that is you're trying to justify the points of polarity and take buy spots just over top of them. Because if you're buying hold levels on leverage, like there's a lot that can happen in a move. That doesn't mean it's breaking, right? Creating certain strict rules for myself on trigger points has helped me a lot in the last few days. And you use the reversing polarity, you use that as leverage increases, because you don't really have a choice. You missed this part of the chart, so you don't have a choice. And if you miss the trade, it's that you weren't strong enough to see that point, right? Because like we marked this and it's perfect. Like we marked we had the levels for 48, like more than 48 hours before they even hit, or roughly 48 hours, or I don't know, whatever the time frame is. Like we nailed this, right? Then, so now that becomes, you weren't good enough to catch this trade, so you have to reduce your risk going forward. And as you get better, you don't have to be in a position where you're sitting right here maybe and saying, well, I don't know what to do because now I'm just under hopium. And so now you've drawn this trend right here. I'll just draw a new trend because this is going to be silly. Now you've drawn this trend right here and you're like, well, I hope it holds this. You know, I'm buying right here. I hope it holds this. And then it doesn't. And then you're out of the trade and then it moves up, right? So the higher the leverage, the more you have to reverse polarity. The more accurate you are, the less you have to worry about that. So hopium would be the word that we would use if it was, if you're buying hold levels and you're just like, God, I hope this one holds, right? But it's not like really using a science. Well, it is. It's just using a muted version of it or diluted version of it. It's just using, you know, a less efficient version. Does that make sense? Just get good. yeah, that would be a way of putting it. Nice, Dak. I hope that makes sense and helps, because it really is the like, now you're splitting apart, where should I enter? I should enter here. If I can't, I should enter reverse. If I can't, I should enter maybe trend or deep dive this. And if it moves up, like, you've missed those trades already, so there's no like focus on the interior range to maybe just take the smaller part of the trade, right? Like, you kind of said it right, like just get good is a way. But like, I think this, me jumping, like what I love about jumping in the chat this week to help people with this, whether or not people had taken this trade, it's set up this weekend to really make a lot of sense out of this for the range development lesson. As always, it just kind of becomes a stupid thing that, like, perfect timing, perfect lesson. And it just set up the perfect kind of lesson for this weekend to show, like, hey, we found this range and this is how it develops thereafter. So I don't know, for some reason it just kind of lined up perfectly. Origin level here, by the way.